Welcome to the Property Wealth Podcast, where we help you navigate the world of real estate investing, especially if you're over 40 and looking to build long-term wealth.
Exactly, Sarah. And today, we've got a hot topic on our hands: Airbnb investing after new regulations. It's something that's been making waves in the real estate community, and we want to unpack it for our listeners.
Right. With all these changes happening, it can feel a bit overwhelming, but we're here to break it down and make it relatable.
We'll cover what these new regulations mean for you as an investor, how to adapt your strategy, and maybe even share some success stories from those who've thrived despite the changes.
Plus, we'll dive into some practical tips on how to find the right properties for short-term rentals and what to consider before jumping in or even pivoting your existing investments.
And of course, we'll touch on the potential pitfalls to watch out for because, well, knowledge is power, right?
Absolutely. So whether you're already in the Airbnb game or just curious about the possibilities, we've got insights that can help you move forward confidently.
Let's get into it and explore how these regulations might actually open up new opportunities for savvy investors.
Sounds good. So Mike, let's start by breaking down what these new regulations actually entail.
So, Sarah, it's really important to address why Airbnb investing is so relevant right now, especially for those of us over 40.
Absolutely, Mike. I mean, for many in that age group, retirement is starting to loom large, right?
Exactly. And with traditional retirement plans being, well, a bit shaky these days, a lot of people are looking for alternative income streams.
Right, and Airbnb can offer that. It's like a way to create a steady cash flow while still holding onto a tangible asset.
Yeah, and let's not forget about inflation. It's been creeping up in recent years, and that can really eat into fixed incomes.
Oh, for sure. I read somewhere that rental properties, especially short-term rentals, can often adjust their rates to keep up with inflation, unlike a fixed income from a traditional investment.
Exactly. I remember talking to a client, let's call him Tom, who was worried about his retirement savings not keeping pace with inflation. He decided to invest in an Airbnb property in a popular tourist area.
How did that work out for him?
Well, he started with a modest 2-bedroom condo. Tom was initially hesitant, worried about the regulations and the potential for market shifts. But he did his homework, and now his property not only covers his mortgage, but also provides an extra cushion for his retirement savings.
That's a great example. It sounds like he found a way to leverage the asset instead of just sitting on it.
Exactly. And, with many people over 40 looking at wealth transfer to their families, investing in properties like this can create a legacy.
Yes, that's so important. It's not just about making money. It's about building something that can support future generations.
Right. And think about the emotional side, too. Having a stable financial foundation can really ease those retirement anxieties.
Oh, for sure. I mean, when you have a reliable income stream from a property, it can really change your perspective on retirement planning.
Yes, and let's not overlook the current economic trends. People are increasingly valuing experiences over things, and that's where short-term rentals come into play.
Absolutely. I mean, we're seeing a shift towards travel and unique accommodations, right? So if you have a property in a desirable location, you might be sitting on a gold mine.
Exactly. And I think about another investor I know. Let's call her Lisa. She had a vacation home that she only used a few times a year.
What did she do with it?
Well, she decided to list it on Airbnb during the off-season. It turned out to be a fantastic decision. Not only did she cover her costs, but she also made enough to invest in another property.
Wow, that's impressive. So she was able to leverage her existing asset to grow her portfolio.
Yes, and what's great is that she didn't have to take on additional risk or debt. It was all about maximizing what she already owned.
That's a smart strategy, for sure. And it's a reminder that sometimes looking at what we have can open up new avenues for growth.
Exactly. And for those over 40, this approach can provide a sense of security and flexibility. Life can throw us curveballs, and having that financial cushion can make a huge difference.
So true. And the peace of mind that comes with knowing you have options. I think that's invaluable as we age.
Right. And let's not forget about the market shifts. The way people are investing in real estate is changing.
Yes, particularly with the rise of remote work. More people are looking for vacation rentals or short-term stays, which can create opportunities for savvy investors.
Exactly. So if you're in a location that's attracting remote workers or travelers, there's a real opportunity to tap into that.
It's almost like shifting your mindset from just home ownership to being a part of this evolving rental market.
Yes. And it's not just about the numbers. It's about understanding that the world is changing and adapting to those changes.
And you mentioned earlier the emotional aspect of financial security. It's essential to feel confident in your investments as you approach retirement.
Right. I think of it as a safety net. Having that additional income from an Airbnb can allow for more freedom, whether it's traveling, helping family, or simply enjoying life without financial stress.
Yes. And for many, that's what it's all about. Finding that balance between financial stability and enjoying the fruits of your labor.
Exactly. So as we transition into discussing strategies for getting started with Airbnb investing, it's crucial to keep these factors in mind.
For sure. Let's explore how to make this work for those looking to secure their financial future and create wealth through real estate.
So let's dive into some core strategies for Airbnb investing, especially given the new regulations. One of the first things to consider is the 1% rule.
Yeah, I've heard about that one. Can you break it down for us?
Sure. The 1% rule basically means that your monthly rental income should be at least 1% of your total investment in the property. So, if you buy a property for $200,000, you should aim for a rental income of at least $2,000 per month.
That sounds straightforward. But what if the property isn't generating that much?
Well, that's where you need to be cautious. If you're not hitting that 1% mark, you might want to reconsider the investment or find ways to increase that income. You could enhance the property, add amenities, or even adjust your pricing strategy.
Right, so it's all about maximizing that income potential. What about the 50% rule? I've heard a bit about that too.
Ah, yes. The 50% rule is another handy guideline. It suggests that you should estimate that about 50% of your rental income will go towards operating expenses. This includes maintenance, management fees, utilities, and more.
So if you're bringing in $2,000 a month, you'd budget around $1,000 for those expenses?
Exactly. This gives you a clearer picture of your actual cash flow. If you find that your expenses are significantly higher than 50%, you might need to dig deeper into what's driving those costs.
Got it. And speaking of cash flow, how do you evaluate a deal overall?
A solid deal evaluation checklist is key. Start by looking at the location. How close is it to attractions or public transport? Then, check the property type and size. A two-bedroom might be more desirable for families, while a studio could attract solo travelers.
And then there's the price, right? How do you assess whether it's a good deal?
Right. You'd want to compare similar properties in the area. Look at their nightly rates and occupancy rates. If most similar properties are getting booked out, that's a good sign.
Makes sense. And what about financing options?
Well, when it comes to financing, traditional mortgages are one route, but they might not always be the best fit for short-term rentals. Some investors opt for portfolio loans or even hard money loans if they need quick capital.
What's the difference between those?
A portfolio loan is held by a lender rather than sold in the secondary market, which can make them more flexible. Hard money loans, on the other hand, are short-term and often come with higher interest rates, but can be useful if you need fast funding to secure a property.
So, flexibility versus speed. Got it.
Exactly. And don't forget about the importance of cash reserves. Ideally, you should have enough to cover at least 6 months of expenses for that property, just in case things go sideways.
That's really smart. What about the types of properties that tend to do well in the Airbnb market?
Generally, single-family homes and condos in desirable locations see a lot of success. Places with tourist attractions or business hubs, but also consider multifamily properties. They can offer multiple streams of income.
Ah, so you're saying if one unit is vacant, you still have income from the others?
Exactly. And don't overlook the potential for unique properties, like cabins or tiny homes. They can attract a niche market looking for something different.
Right, it's all about finding that unique angle. Now, what should we keep in mind when assessing different markets?
Look for markets with strong tourism sectors, but also areas where you can tap into local demand, like business travelers. Also pay attention to seasonality. Some markets have peak seasons that can significantly boost your income, while others may be more stable year-round.
That's a great point. And you mentioned regulations earlier. How do we navigate those?
Always start with local laws regarding short-term rentals. Some cities have strict regulations or even caps on the number of days you can rent out a property. It's essential to do thorough research before diving in.
Yeah. You don't want to invest in a place that suddenly becomes illegal to rent out short-term.
Exactly. And keep in mind that regulations can change. Staying informed through local real estate groups or forums can help you stay ahead.
Okay, so to recap, we've got the 1% and 50% rules, deal evaluation checklists, financing options, and the importance of understanding both property types and market dynamics.
Right. And with that foundation, you're already ahead of the game, but there are definitely common pitfalls to watch out for.
What are some of those pitfalls?
Well, one big one is underestimating your expenses, especially with maintenance and management. You might think, oh, it's just a rental, but things can come up.
Like what?
Things like repairs, unexpected vacancies, or even higher cleaning costs. If you're not budgeting properly for these, it can eat into your profits.
That makes complete sense. Anything else?
Yeah, being too hands-off is another trap. Even with property management, you have to stay involved to ensure everything is running smoothly and your guests are happy.
So staying engaged is crucial.
Definitely. And lastly, don't let emotions cloud your judgment. Sometimes a property seems perfect because it's beautiful or in a great area, but the numbers need to make sense too.
Good advice, Mike. It's all about balance, right?
Exactly. It's about making informed decisions based on data and not just what feels good.
Well, I think we've covered a lot of ground here.
We have. And I hope this gives our listeners a solid foundation for their Airbnb investing journey.
Absolutely. Looking forward to hearing more about the pitfalls next.
So, one of the biggest pitfalls I see with new Airbnb investors is over-leveraging, right? They get so excited about the potential cash flow that they stretch their finances too thin.
Exactly. It's like they see dollar signs without thinking about the risks. I remember a friend of mine, she jumped into an Airbnb investment thinking she could cover the mortgage with rental income, but she didn't account for the slow seasons.
Yeah, and that's a classic mistake. If you're relying solely on that income to pay the bills, you could find yourself in a pretty tight spot when occupancy drops. It's all about having a buffer,
Right, and speaking of buffers, bad tenants can really throw a wrench in your plans too. I've heard stories of investors who didn't do thorough background checks, and they ended up with guests who trashed their properties.
Oh, absolutely. I had a client who skipped the screening process, and they ended up with a group that threw a wild party. The damage was extensive, and they lost out on a month's worth of income just to fix everything.
That's so frustrating. It's crucial to vet your guests properly. I mean, it doesn't have to be complicated. Just check reviews from previous stays, and you can usually get a sense of who you're dealing with.
Definitely. And let's not overlook ignoring cash flow projections. Investors sometimes get so caught up in the potential profits that they forget to do the math on their actual expenses,
Yes, I think some don't realize how much those hidden costs can add up. Things like cleaning fees, maintenance, utilities, they can eat into your profits quickly if you're not paying attention.
Exactly. I had another investor who was so focused on getting the property ready for listing that they didn't budget for ongoing maintenance. A few months in, they had plumbing issues and ended up spending thousands on repairs.
That's a tough lesson to learn. It's essential to factor in those ongoing costs from the get-go. And then there's timing the market, right? Some think they can predict when the best time to buy is.
Oh boy, the timing the market trap is a big one. I had a colleague who waited for what they thought was the perfect moment to invest. But in the end, prices just kept rising, and they missed out on a great opportunity.
Yeah, and it can lead to analysis paralysis too. You weigh the options for so long that you miss out altogether. Sometimes it's better to just jump in, as long as you've done your homework.
Exactly. It's all about finding that balance. And then, there's also the issue of not having a contingency plan, right? If something goes wrong, what's your backup?
So true. I think it's wise to have a plan for unexpected events. Whether it's a sudden renovation or changes in regulations, Being prepared can save you from a lot of headaches later on.
And regulations, wow, they can change fast, can't they? I've seen investors who didn't keep up with local laws and ended up getting fined or even losing their permits.
That's a huge risk. It's essential to stay informed about local regulations, especially for short-term rentals. Regularly checking in with local real estate groups or forums can really help you stay in the loop.
Absolutely. And sometimes it's just about being proactive. I remember one investor who joined a local Airbnb community group, and they got insights that helped them adapt quickly to new regulations.
That's a smart move. It's all about networking, really. Connecting with other investors can give you a heads up on what's working and what's not. And it's nice to have that support, too.
For sure. And I'd say another common pitfall is not having a clear strategy. Some investors dive in without really thinking about their goals. Like, what are they trying to achieve with their investment?
Yes! Setting clear goals can guide your decisions, right? Whether it's cash flow, property appreciation, or building a portfolio, knowing your why can help keep you on track.
Exactly. And if you don't have that clarity, it's easy to get sidetracked by shiny objects, like flipping a house or investing in a different market just because someone else is doing it.
Oh, that's a great point. FOMO can be a real issue. It's important to stay focused on your own strategy instead of getting distracted by what others are doing.
And speaking of distractions, let's not forget about the importance of regular property inspections. Some investors might think everything's fine until it's too late.
Right? I've heard of situations where investors only checked in on their properties sporadically, and then they found major issues that could have been caught earlier.
Exactly. Regular inspections can help you spot problems before they spiral out of control. It's a small investment of time that can save you a lot of money and stress down the line.
So true. And if you do spot something early on, it's usually easier and cheaper to fix. It's all about being proactive, right?
Absolutely. And this ties back to the importance of education. New investors should really take the time to learn, whether it's through courses, books, or podcasts like this one.
Yes. Continuous learning helps you avoid those common pitfalls and navigate the challenges more effectively. Plus, it gives you more confidence in your decisions.
It really does. And remember, it's perfectly okay to make mistakes along the way, as long as you learn from them, right?
Exactly. The key is to recognize those mistakes early, adjust your strategy, and keep moving forward. There's always a way to recover.
For sure. So as we wrap up this section, let's transition to the next steps. What can listeners do to avoid these pitfalls and set themselves up for success?
Well, I think starting with a solid plan is essential. Outline your goals, budget for hidden costs, and stay informed about regulations.
And don't forget the importance of networking and continuous education. Surround yourself with experienced investors who can share insights and support your journey.
Exactly. And remember, it's all about being proactive, whether it's regular inspections, thorough tenant screening, or just staying in touch with market trends.
Great point, Sarah. It's all about building a strong foundation and being prepared for the journey ahead. All right. So let's dive into some immediate steps that folks can take right now. Starting small is key, especially when navigating the new regulations around Airbnb investing.
Absolutely. It can feel overwhelming, but just taking one step at a time makes it much more manageable. What's the first thing you think people should do?
Well, I'd say the first step is to really understand your local market. Check out platforms like Zillow or your local MLS for current listings. It helps to know what's available and what's trending in your area.
Right. And that can also give insight into pricing. So once they've done that, what's next?
I'd recommend using tools like Rentometer to analyze rental prices in your target area. It's pretty straightforward. Just input the property address and it'll give you an idea of the rental rates for similar properties.
That's super helpful. And for those who might want to take it a step further, what about analyzing the deals?
Great point. The BiggerPockets calculator is a fantastic tool for that. It allows you to input all your expenses and see potential cash flow, which is crucial for making informed decisions.
Yeah, and if someone's pretty new to this, just playing around with that calculator can really build their confidence.
Exactly. And, creating a checklist can be a game changer. Just jot down things like property management costs, cleaning fees, and any local taxes that might apply to short-term rentals.
Oh, that's a smart idea. What about building a habit around this?
I think starting small is the way to go. Maybe set a goal to analyze one deal a week. Just pick a property, run the numbers, and see how it stacks up. It's a great way to build your skills over time.
That sounds doable. And joining a local meetup group can also be beneficial, right?
Definitely. Connecting with other investors can provide invaluable insights. You can share experiences, ask questions, and even find potential partners for future deals.
Plus, it's a great way to stay informed about new regulations, right?
Exactly. The more you engage with your local community, the better you'll understand the landscape. And speaking of resources, there are some excellent books out there.
Oh, I love a good book recommendation. What do you have in mind?
The Airbnb Story by Lee Gallagher is a fantastic read. It really dives into the origins of Airbnb and offers a lot of lessons on the hospitality side of things.
I've heard great things about that one. Any other recommendations?
Real Estate Investing for Dummies is another solid choice. It's accessible and covers the basics really well, which is perfect for anyone just getting started.
And podcasts. There are so many out there. What do you listen to?
I love Bigger Pockets podcast. It's packed with stories from real investors, and they tackle a wide range of topics. Very relatable and actionable, which is what we want, right?
Totally. It's like learning from others, experiences without the trial and error. So what's the bottom line on all of this?
The bottom line is to start where you are. Use the tools available to you, engage with your community, and build those habits.
That's such an encouraging way to look at it. So, with these tools in your pocket, you're ready to move forward. Let's recap what we've covered today.
All right, so let's wrap this up. We've covered quite a bit about navigating the new regulations in Airbnb investing.
Yeah, it's definitely a lot to digest, but I think we can highlight a few key takeaways for our listeners.
Absolutely. First off, understanding your local regulations is crucial, right? You really need to do your homework before jumping in.
For sure. And then there's the importance of building a strong relationship with your local community. They can really help you navigate any potential issues.
That's a great point. Plus, diversifying your investment strategy is essential. Relying solely on short-term rentals can be risky with all these changes.
Right. And we talked about the value of offering unique experiences. It's not just about a place to stay, but creating memorable stays for your guests.
Exactly. And let's not forget about the financial side. Keeping a close eye on your cash flow and potential return on investment is key.
Well, it all comes down to being proactive and adaptable. That's how you build long-term wealth in real estate.
Yeah, and, if you're over 40 and thinking about investing, it's never too late to start. You just need to take that first step.
Definitely. So if you found value in today's episode, we'd love it if you could like, subscribe, and share your biggest takeaway or any questions you might have in the comments.
And don't forget to share this with someone who's over 40 and interested in property investment. It might just inspire them to take action.
Next time, we'll dive into VRBO and furnished finder strategies. I'm really looking forward to that one.
Me too. It's going to be a great conversation.
All right. Thank you all for tuning in. We appreciate you spending this time with us, and we'll catch you next time.
Take care, everyone.